So I'm not the super bull that just says, no, new highs, new highs, new highs, but that it won't be long before it's back up. Much like gold did when it broke the 2000. It failed 3 times. It broke the fourth. It just had a short dip down. It didn't take long. It came back all in the same year. But you probably have to do something. So this is not necessarily even to scale. It could be something like that a lot sooner. So I'm not implying that late in time, but a small little return move. So take it back, buy it back a little bit cheaper again on your trading account, and then trade for a $300 advance. And again, that's going to be tied to 7,800 potentially gold.
According to FrancisHunt, also known as the market sniper, silver prices have been showing significant gains. Technical indicators and historical patterns suggest this upward trend will continue despite short-term fluctuations and potential resistance at historical highs. The overall outlook for silver remains bullish, with substantial long-term upside potential. On May 20th, silver hit a multi-year high of $32.50 per ounce. Since then, the price has pulled back, with the area just below $30 acting as significant resistance, now seemingly providing support. Analyst David Morrison of Trade Nation comments that this area has previously acted as significant resistance, so it's reasonable to assume it is now acting as support. The question remains whether there's more downside to come, but strong rallies can appear unexpectedly, particularly after significant pullbacks. These rises in precious metal prices have been further boosted by a weaker US dollar following last week's disappointing US jobs report. Hunt notes that despite not yet matching gold's performance, the recent rise in silver's price indicates building momentum. This momentum will attract more investors as silver approaches and challenges its historical highs. On Monday, silver prices rallied sharply, posting more than 4% gains. The gray metal bounced off daily lows of $30.25, capitalizing on thin liquidity conditions as Wall Street remained closed in observance of Memorial Day. Technical analysts, including Hunt, see a substantial pattern forming in silver prices, suggesting a significant move. One such pattern is the cup and handle formation, a bullish indicator. Join us as we delve into FrancisHunt's insights. To stay updated with our latest uploads, subscribe to our channel and activate notifications. Thank you, and enjoy the video.
You're right to ask around the $30 mark because it has been seminal. I do think we're going to trade a bit below for a bit, but I don't think silver is going to disappoint in the long run. Let's just get that silver chart up and give you the big time frame view. Silver is kind of half a cycle behind the gold chart in terms of progress. It hasn't made the new high yet. And the $50 mark is a very important level, and I'll refer to it in a minute. But the silver had some structural other levels of great significance that have been leaning on it. So that was the gold high over there. That was Wall Street Bets high, which was tiny bit higher on the silver. And then this was this dotted line, capping descending grind line that we said would eventually break. And it did at the 24.8s. And since then, you've been in breakout. You broke above the 26, which was a horizontal level, quite a soft ceiling on a couple of these levels here. We moved, and now you've taken out all the previous highs. So this is clearly a continuation to the upside. And in most of these structures I've had since I've been appearing with you. So these are not new draws. These projections of targets to the upside have existed waiting for the breakout moment. For us, we were on it early over there. Then we were seeing it again on 26 there. You got your return move, and now you've broken all-time since the 2011 highs. I don't want to say all-time highs. I want to say modern last decade highs with this recent move. We are getting a bit reversed back in right now. I think it can fall below 30 again, possibly. But it's a little bit less, silver is a little more fresh than gold, but it is also a higher beta. So if gold continued to get battered next week, silver could accelerate a little bit to the downside. But this is really new territory. It's new territory for the last decade. And actually, if we go back up to the super big time frames, we've got this triggering a substantial pattern. I'm going to put 2 months on here because this is almost too much time. A substantial pattern, and this is giving us, again, big projections. Many traditional technical analysts will draw you a cup and handle on this silver chart. Because of the relationship with 50 there and close to the 50 there, this is a huge multi-year. So that was 79 all the way up until 2011. 21 and 11, it's about 32 years. Now this handle is turning abruptly. It started its turn. We had the COVID flush out there. Then we had 3-year rest, but this is now breaking into new highs. So I see this coming up to that same 50 mark and then having a rest. And we've got a 38 target here for you and a 44 target that are all part of these lower time frame upside moves. So that pole being projected from that low, we're getting a couple of these. So it's got a couple of targets to run there. And then you're going to be probably in and around what I'd say the mid 40 to that 50. That's a special resistance. Now, I'm not going to tell you everything you want to hear. I think we fail at the 40 to 50 one more time. So it's always 3 rejections normally. There's your 80s rejection, early 80s. There's your 2011. And we will have a 2024 or 2025 $40 or $50 rejection. I would take some profits off on trading profits. I wouldn't sell investment. I would take trading profits off in the range of 45 to 50 on a lower time frame. I'll be watching the momentum there. But I don't think you go away for long before you come and you break and then we're off. And that's where I see a 302 projection. And that comes from an HVF target that we have had.
Gold has demonstrated remarkable performance in 2024, beginning at $2,054.05 per ounce on January 3rd and rising to an all-time high of $2,450.05 per ounce by May 20th, reflecting a 19.27% increase. In May alone, gold prices rose by approximately 6.2%. However, silver has surpassed gold, with a more than 25% increase in May, reaching $33.50 per ounce, a 44% rise from the beginning of the year. Silver leads among precious metals in price gains for the year. FrancisHunt predicts that silver is poised for significant moves, with technical patterns and critical levels suggesting short-term fluctuations and substantial long-term gains. The relationship between gold prices and the gold-to-silver ratio provides a framework for projecting silver's future performance, indicating potential for higher prices. Supporting this outlook, analysts at Swiss bank UBS have noted in a recent research report that the gold-to-silver ratio has fallen to its lowest level in nearly 2 years, as silver's price has climbed 31% in the last 12 months. This drop in the ratio highlights silver's robust performance relative to gold, suggesting a potentially bullish phase for the metal. Let's return to the interview for more insights.
We've been constrained, and I've said, Tom, we're not going to have the major moves we want until that basing ascending grind line breaks to the downside. And I said, we're not breaking to the upside out of this. On balance of probabilities, we are expecting a downside break, and it will be bullish, and it will be the beginning of silver starting to realign with gold. And that is absolutely started to happen. A key 30 level has fallen. It's going to get tested. We'll probably get into the 28, 29s again, 1 or 2 more times at a wick level. But now that holy grail is broken, and you will probably note this came to the 75. I'd already marked this as a key round number I would expect us to fall. And I've also warned many times, even when it happens, you can get a short-term return move before making new lows. But the next key level of real significance is 65, and we've touched the 75, which I kind of expected to be the place. We've done this analysis before. Again, this blue line's been on all our previous videos, and it captures that low as a bit of a soft floor. So the 75 is serving as a bit of a soft floor since getting back up above it back in July of 21. So we're at a bit of a soft floor, but we've just taken out a major level, and that's disorderly decline, and that's driven both up, particularly silver. So silver starting to correct. I think the 65 brings the silver, and the mathematics we did together once before, the 65 neckline, so to run the 65 neckline is going to bring silver to that 45.50 gateway, I think, for me. So you'll probably run maybe a 60 or a 61 in some of the momentum running through that. And at that point, gold will probably be at its 2,900, maybe call it $3,000 for want of a better number. And if you're at a 60 PE ratio, I call it PE ratio, gold-silver ratio, and you're at the $3,000 gold, you can calculate what your silver will be. If you divide $3,000 by the 10, you're on 300 divided by 6. It's kind of $50 silver, isn't it? So 65 is going to be somewhere between $45 and $50 silver. So I love it when you see the patterns on the cross valuation tie up with the technical targets that you're expecting on gold on the upside and silver. And that's when you bounce again. So then we come back up, gold-silver ratio will go up a bit, silver will come back more than gold. Gold will hang on a bit more, but will still pull back. And then we wait. And the next run after that is the run of the ages. Because that's where we define 5 stages of a breakout. This is just the initial breaks. The real break of this head and shoulders target that we have on a massive, massive level is going to take you right the way down to 30. So when you go from 65 down to 31, 32, and this pattern, that's that purple line down there, and it requires a lot more of the pattern to the left for everyone to see it. But 32.8, you're getting at about a third. So now you've gone from at one point 128 ounces of silver to buy a gold ounce to 32. It's still got lower to go, in my opinion, after that, but that's going to be a big target run. That's a third of 100. So if gold is now sitting at 6.5, and you're at a third on silver, you can calculate the next silver price potentially. So if you're at 6,500 gold and you're at 1/3 of 100, well, you divide by 100, it would be 65. So you multiply the 65 by 3, 180 plus 15. You're going to be at $195 silver when you're down here potentially.
Silver prices have recently shown notable increases, underscored by technical indicators and historical patterns. What key market dynamics and fundamental factors do you think are driving this consistent upward trend in silver's value? Moreover, how do you anticipate these factors will influence its future trajectory? If you find this topic engaging, please share your thoughts in the comments section below. Don't forget to join our community by subscribing to our channel and turning on notifications by clicking the bell icon. Thank you for being an integral part of our community.